Hi everybody, it's Tuesday. We're on the floor of the New York Stock Exchange with Jim Cramer to break down today's market action. All right, Jim, we hit 3% in the 10-year Treasury yield. We are back below it.
The obsession with 3 is one of two things that keep this market from going up. The other is the tariffs, particularly the May 1 deadline. And as long as there's an obsession with 3, the algorithms will say sell. So you'll get really good earnings and you'll say, wow, what happened? Why didn't anyone buy those stocks? And the answer is the obsession with 3. Now, it's true that back in July of 2016, this thing was dramatically lower, but it's also true that in 2014, it hit 3 and the economy was quite weak then, and it shouldn't have hit 3. So the thing that people have to recognize, and I think there's been too many people who just haven't been around long enough, is that when the economy gets strong, people sell bonds. That's what they do, and I think that those who don't understand that are going to sell stocks. They'll sell bonds and they'll sell stocks forever. I mean, if you really believe that 3 is the be-all and end-all, wait till you get to 3 1/4. Wait till you get to 3 1/2, because there is strong demand for money in a lot of parts of the country, and when there's strong demand for money, and there's not enough people who are buying the bonds because the Chinese are on strike, rates go higher. Now, if you've decided, and I did a piece this morning for Real Money, if you decided that it doesn't matter and all that matters is the 10-year, then you should sell everything because you're going to get smoked. I think that's stupid. I think that you let it come down. We've been letting it come down for action alerts. We have some stocks that are doing well. Some companies are doing well and the stocks are going down. Some companies are doing not as well and the stocks are going down. And it tells you that the 10-year's in charge. It shouldn't be in charge, but it is.
And, you know, PulteGroup is another one of these stocks levered to the 10-year.
How'd you know?
Worries, because you mentioned it on your Mad Dash.
There you go. That's what I'm talking about. Okay, so Pulte is a good example of that they did well despite mortgage rates, but you know what? There'll be people who say, yeah, but look at Masco. There'll be people who say, you know, but look, we've already had, that's the peak. That's the last good quarter. Against that is you have a stock like JP Morgan, which we own for action alerts, which won't be able to be kept down. Why? Because rates are going higher, and that's what it needs. But there are more there are financials and industrials that do well. And then there's a lot of other companies that do poorly. And if you take a look at a Procter, which I wrote about, a Philip Morris, which I talked about last night on Mad Money, or Pulte, what you get are people who say, you know what, I don't want to own these stocks because it's the last good quarter, or because of inflation, I don't want to own a Philip Morris, I don't want to own Procter. So they end up just saying, okay, well, what stocks really do better in a rising rate environment? Oil, some industrials, and the banks.
Well, I go back to your interview with First Horizon last week, and that CEO said the sky is not going to fall if we hit 3%.
No, I mean, look at Caterpillar. A lot of that's domestic strength, and that's because exactly what Brian Jordan said about in First Horizon. What he said is that the economy is so strong that rates are going to go up, but it's not going to derail the economy because it's such a small amount. Now, if you think that 3 is just a way station to 5, then again, you got to get out. And I'm saying these things, when I say you got to get, I am saying that, look, if you think these things are going to happen, then and you're scared, you can't invest, and I'm doing this teaching May 5th. I'm talking about what it's like to invest scared, what it's like to invest without any conviction, what it is like to have no discipline and no conviction. Because when you get that toxic combination, you really have to go be in cash. It's not who I am, but it's what people are thinking. I mean, to me, we have an action alerts, we'll talk about it, we have 3M down to where it yields 267, and everybody's going to sell it because they cut forecast, but they told you they're going to cut forecast a month and a half ago, but no one seemed to realize that. And that's an example of something that you're going to have to live with because it's not nearly as bad. Alphabet's same, we'll talk about that in our special call. Yeah, our special show after this.
You mentioned how 3M kind of warned us. I think we had
we'll talk about that in special.
Yeah, so we had a similar situation though with Hasbro. You had the CEO on Mad Money last night.
Right. You know, that was one where you just knew that they weren't going to make the quarter because they told you they weren't going to make the quarter. So people got it down. Then the stock was trading down 7, which was crazy because if you listened to Brian Goldner on Mad Money, you knew that he was going to guide down. What is working? Well, something like Caterpillar that people felt that China couldn't hurt them, and China didn't hurt them. Things that people are short are what's working. And there's a big short position in Cat.
So to sum up, it's this kind of hedge fund mentality where anything with exposure to China is potentially a problem.
Yeah, and I mean, look, 3M's ludicrous, but I understand. If it's down 12, it goes down 15. Verizon was up nicely, and now that comes down. Procter's down for a second day. Philip Morris down for a third day. I mean, you know, if a stock's in a downtrend, it's not going to be done going down. Bruce Camish was some very good stuff about that.
Verizon, you tweeted at John Ledger. Did he respond yet?
Not yet.
Okay. Jim, who do you have coming up on Mad Money tonight?
People who want yield, Six Flags is a great yielder. Yields 5%. I always try to have the great yielders on Mad Money because so many people want income.
All right, everyone, if you want to know Jim's take on Alphabet, please join us on actionalertsplus.com. We'll continue the conversation over there.